the stock market becomes an ideal gambling parlor activity. What we're getting is wretched excess and danger for the country.
Well, that was a little bleak. If you don't know who that was Charlie Munger. He's the vice chairman of Berkshire Hathaway, and he was speaking at the Daily Journal annual conference. I gotta tell you, there are a lot of things that he said that really resonated with me, and some things that definitely came off very, very poorly, but I understand what he's trying to say. Overall, I think everyone should go see what he said for themselves. I could take quotes and run them for hours and talk around them, but I really think that everyone should just go look for themselves. With that said, I'm going to go ahead and get started on today's analysis. Beginning with AMC, everyone's favorite stock. You can see today was a green day right here, and there was a very, very tall wick, which is generally pretty bearish. It looks like the price rejected around that $21 level, which is the bottom of that descending triangle. I've been charting for a while now. I'm going to zoom into the 15-minute time frame. We can see what's going on. If you recall, I drew this rising wedge in yellow, and I said, hey, I think the price is going to be consolidating in a narrowing range, i.e. a rising wedge, and you can see that the price has taken an affinity to that line and is still spinning along that level. Just that's what I see. Of course, on the 15-minute time frame, you can see that the volume has been dropping since that last high, that last touch from that bottom level of the descending triangle, and today's high was lower, and the price did fall and rise as those FOMC meeting notes were released with the SPY as well. And that was really interesting. I didn't think that there was really anything that bullish being released, but the markets disagreed, I guess. So, did I day trade AMC? No. I'm trying to get away from day trading entirely. I'm trying to use my fundamental analysis to enter into positions. Going on to what Charlie Munger was saying, I feel like a lot of the wild volume and price swings that we see in these stocks and these really high valuations are a complete detachment from the reality of what the equities markets were supposed to do. And I'm not even sure if most retail investors understand what they're doing when they're trading stocks. The value of these shares is not something that most people consider, I believe. And I say that because the most popular form of analysis is the technical analysis, like this. And this technical analysis analyzes the price movements, and it shows how money is moving into and moving out of a stock and how the price may be affected moving forward based on these momentum indicators. But what it doesn't do is tell you what a good price for the stock is. And there's a lot of different aspects to judging what a stock is actually worth. So I understand what Charlie's getting at, and I don't want to be a part of the problem, so I'm moving away from day trading. And actually, the majority of my position right now is currently in GLD, because honestly, I feel like there's a reckoning of sorts around the corner, and listening to Charlie just confirmed that bias for me, so okay, let's go ahead and talk about the SPY. Here we have it on the 15-minute time frame. This bottom yellow level, this is an ascending broadening wedge, and the price has been interacting here for quite some time, and today was no different. You can see the price yesterday, it gapped up, hung out above, and then today came down, touched it, and then rallied towards the close. All right, not much reason to rally there, I didn't think, but the price is looking better than it has in the last couple of days, pulling back up into the pattern, as you can see, and we had an outside trading day today with a high and a low above and below the prior day's range. So it does look like there was a touch and a test of that level as we saw in the 15-minute time frame, and a bounce up. But again, there's going to be some resistance here that needs to be overcome before I can feel bullish. Right there, you can see that the bottom of these candles formed a level of support or resistance, and today's candle did not break above that. So I would be kind of, it's not a lot of volume either. Look at the volume. Volume was below the 30-period average. RSI, totally flat. IV, dropping. If I had to say anything, I would say it's probably a bull trap. It's probably a bull trap, and I think that we're going to see the price fall. That's okay. I'm just feeling really bearish on a bunch of stuff because that's just the way it is. And one of the things I'm watching that makes me think this is gold. Look, this is GLD. This is an ETF. And it seeks to perform with the price of gold. And as you can see, it went on a tear All right, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. Okay, so almost 3 trading weeks, 2 red days. And this red day yesterday, holy doji, right? Was it a doji? I'm actually gonna look this time. Opened at 173.10 and closed at 173.08. 2 pennies. I'm calling it a doji, and it hit that level of resistance, the top of that chart pattern there, which was, let's see, it looks like a symmetrical triangle consolidation. And you can see that we did have a bullish breakout here on high volume. This test here would be a confirmation of a bullish breakout, and today validates that 110%. Look at that candle. Look at that. It's just pure green. Is there a tail? I mean, kind of. Let's go ahead and zoom in on this on the 1 minute. What this looked like today. Just solid. Look at this. It even formed this weird intraday double top and then just like said, nope, screw that. We're going higher. This is a big red flag for me in terms of the equities markets, to see that gold is performing so strongly, as I believe that the equities markets in general are overvalued while inflation is so high, and PPI, the producer price index, is rising faster than CPI. I think that really what we're experiencing currently with these positive earnings and the liquidity in the markets is temporary, that this will come to an end and we will see a bear market. It's gonna have to happen. And I'm just seeing that be confirmed here as these more secure assets are starting to see some more volume and some higher prices. So GLD is one of those. I'm gonna go ahead and check on gold futures, because the derivative market for gold is much bigger than the actual supply of gold, and that's a whole thing, derivatives markets, and I'm not going to go into it, but let's have a look. So yeah, what do we see here? Ooh, we see a little bit of red on the chart. That's interesting, isn't it? This is looking like some sort of consolidation and then a little indecision here in the marketplace. Volume was like super low. Super interesting. Let's have a look at it on this time frame. Yeah, what do I see? I see that the price passed a level of support and resistance, set a relative high, tested that, and now is moving higher. So moving into tomorrow, I'd be looking for a peak above 1881 to confirm another solid move higher. I am really interested to see that though. I'm gonna go ahead and turn on my weekly chart here. And this is what I'm really interested in, is where we're at relative to this massive pattern. I'm gonna show it over and over. I just wanna make sure that everyone who subscribes gets to see this. This is a massive descending triangle, okay? And this triangle is forming after the biggest rounding bottom I have ever seen. This is huge. It lasted from 2010 or 11 to present. And we're now seeing this nice consolidation, a sweet handle. And you know, on the weekly chart, yeah, this is looking really good. I said this earlier, if the weekly candle can end somewhere like this with a body above the prior week, this is looking really bullish. So I'm not really concerned about seeing a little red today. That's okay. Volume was like non-existent. So you can see here the day prior was 1,036 and today it was at 582. So I do see that the open interest is remaining high. I'm looking forward to the open interest dropping. Typically that's bullish for the price, I believe. You can see as the open interest here is dropping that the price goes up. The thing is that as gold futures contracts are exercised and the gold has to be sourced and purchased in the real world, that causes a level of demand that can drive the price higher. So there is always a potential. Everyone talks about short squeezes, right? And all this, oh, the supply and demand of these stocks. That condition has existed in gold and silver for a long time. And it hasn't really meant anything, but it can affect the markets. And I think that dynamic exists a lot stronger in an actual commodity asset. All right. So here we go. Gold, looking bullish. Still very, very bullish on gold. Now, I haven't talked about GNPX in a while. GNPX is a company that I'm holding for its fundamental value. I feel like the company has made a lot of headway in terms of the research and the products that they are developing, and that moving forward that they're going to be able to make an incredible amount of money meeting a known demand as healthcare advances in the treatment of cancer. So what do I see? I see a good uptrend. This is a hypothetical uptrend, and it's hypothetical because I would only draw this uptrend once a higher high is set from this last big run up, and we haven't seen that yet. So this is a hypothetical line, and it's performing quite well. You can see the price touches and bounces all the time. And so currently the price is up here at around 236, which I do like. You can see yesterday we had a big strong green day. I'm going to turn on a smaller time frame here. We can get some more context. Yeah, this is nice. This is a nice grind higher. This is looking really good, especially after this massive run up to 362, and then it fell down. And I was worried that we were going to see the price drop to around $2, but that does not appear to be the case. The price has recovered and pulled above that trend line, and I'm really happy to see that. I do have a note here: investor conferences are on February 14th through the 17th. I think that's a good opportunity for the company to draw some investment opportunity attention, you know. So keeping an eye on GNPX. I'm also long on Sundial, surprisingly. You know, they acquired another company that's already making money, which I like. And looks like there is some resistance here at 63 cents. There is a horizontal level of support and resistance. And the price today came up, broke above it, dipped down, and it ultimately closed below it, it looks like, at the very end of the day today. This does look like... Is it consolidating? I don't know, because the trading range isn't narrowing at all, but it certainly is moving and closing above a downtrend, which is a bullish thing for me. Let's have a good look. That's a huge downtrend, right? Geez, let's back out a little more. How far do we have to go to see the full extent of the downtrend? We have to go back to earlier in 2021 when we saw the high of 396. The price fell sharply, and there were a couple of different tests that failed, and then the downtrend accelerated a little bit. We had a double top or cat ear pattern form, and then boom, the price fell. And as it found a low near 39 cents, we saw a new uptrend form and a couple new horizontal levels of support and resistance be broken through as the price pushed higher. And this is looking really good to me. I like the way this looks. You have this big downtrend, the price broke out above, came down, tested it, and now it's closing above it consistently. And now we're struggling to get through that 63 cents level of resistance, but once the price passes through there may be a little bump at 69 cents, but then I would like to see the price rise without much resistance up to $1, and that's the goal, is to keep this thing on the NASDAQ, I think. Keep it trading on the NASDAQ, please. Don't make it OTC. Okay, so Sundial. I'm long on Sundial because I think that the share price is low relative to the value that the company can provide, and that the company will grow into the future moving forward. So I'm long on Sundial, GNPX, and also on American Eagle Outfitters. And I've actually been reducing my position in American Eagle Outfitters to buy gold. And I've been doing that just on the merit that I'm afraid the price of American Eagle Outfitters may drop a little more before we see a run at the earnings coming up in early March. So I want to get a good cost basis. I'm not trying to time the market. I am trying to buy the dips, but I'm just really caught up with the tensions between the Ukraine and Russia and the US. There's just so much going on right now. I think that a bad news event really could send the market spiraling downward, and that could provide a better buying opportunity for me. In the meantime, I think I'm just going to be accumulating a lot of different safe haven assets like gold and bonds, etc. So let's go ahead and have a look at American Eagle. You can see that today was a red day, a couple of red days, bouncing off this horizontal region of support and resistance at around 22.45. I'm going to turn on a different set of charts here, try daily. And this daily chart has a falling wedge that I've been following, and the price did break out and then failed to move above this 24.30 level, pushed downward, big dump earlier this week, and now we see the price is bouncing off of this uptrend here, and I'm happy to see a bunch of tails at that trend. This is good, and the price is now starting to consolidate in this very tight zone. I would be surprised if the price were to well, I don't think it's going to break out, not tomorrow. That'd be before the earnings, right? I want to say I'd be surprised if it didn't break out. But actually, the truth is it could fall and just continue to travel in this pattern until the earnings announcement, which would be right about here. All right, that's kind of what I'm looking for, I guess, is a double bottom, and then up it goes. But that's just a guess. I like to guess. It's fun. The RSI is just stuck in the middle of this, of the 45 to 55 zone. It's just... I think we're going to see a big, when this does move, I think it's going to be a big move, and I think it's going to go up. We had some retail sales numbers come in today. I haven't looked at them, but I've heard they were good. When I was looking at the PPI and the CPI, yesterday making that video about inflation. I did notice that the CPI for clothing items wasn't as high as in other categories. So that would tell me that the increase in wages would have more buying power relative to other things. And as people get new jobs, they tend to go clothes shopping. That's just me saying, hey, observing my own behavior, the behavior of people I know, and assuming that's typical and common throughout. And that's what I think I'm seeing. So I'm really looking forward to the earnings coming up in early March for American Eagle Outfitters. What else was I watching today? I do want to talk about Etsy. Why Etsy? Because the Street had an article about Etsy and they were saying, hey, consider shorting Etsy this week. And then I looked at it and I said, I don't know, I do see this big rounding top, yeah, but I also think that we have a nice diamond bottom after a measured move down and that we could see short-term a pull back up. So here we go, where are we at? We had a couple of green days and then today, big red day, a dump. Not really that bad of a dump. We do have some horizontal support here. You can see that earlier in that diamond bottom pattern, somewhere around $138. The price did push down below it looks like, and then pull up. I'm going to zoom in on a tighter time frame, and we're going to make this a little taller. Nice. Yeah, you can see the price fell drastically at open, and then seemed to find a nice bottom there in the middle of the day and pulled up. This does look pretty bearish though. That could be a bear flag, but it is an intraday pattern. I'm not going to put a whole lot of trust or weight into it. I think this is still a wait and see scenario. Let's see what our weekly candle looks like. Let's just go 3-year week. It is a little red on the week, so we got 2 more days to see if it'll pull back up and turn green or not. I really want to see this turn green because I would just love to say, hey, the Street was wrong. I never believe those articles, but I need to actually do some experiments and some observations and record them and reevaluate them in order to confirm or deny that bias. I need to challenge my bias, right? So that's what I'm doing with Etsy. Moving on, let's talk about one more, Facebook. There was some news on Facebook today. Facebook weekly chart looking nasty. And this is what I want to see. I don't like Facebook. This is an activist position for me. I do not want to see Facebook succeed because I think that they are causing more harm in society than good. And here we see that there was a new low set at 212 and the price did bounce off of that level. Let's zoom in a little closer, get some context for what that move looked like. Okay, this is not going to work. I need to zoom. Okay, here we go. So this is what we currently have. We're currently traveling within some sort of downtrend. I haven't really looked at it quite that closely. If I want, I think that's a good way to express that downtrend, connecting those first 2 peaks. The price did rise above there. It spun a little bit before dropping, and then the price did re-encounter that level yesterday, but dumped at open today, and then kind of crawled its way back up with everything else towards the end of the day. So this looks like positive market pressure more than anything else. We actually did get some more bearish news on Facebook, which I do want to cover, so I'm going to pull it up now. Here we are. Sorry to blind you with this white page of brightness, but this is an article that I could pull up without encountering a paywall. You can see Google will make it harder to track consumers. It's a blow to Facebook. This is similar to what happened earlier with Apple. Let's see here. I think we can see this here. The move echoes recent steps Apple has taken to reduce the ability to track user activity on iPhones. So you see other companies are starting to step up and limit Facebook's ability to, well, I'm going to say, acquire data in invasive ways and build profiles on its consumers to sell. And I think that's good. I really do. It's going to hurt Facebook a lot. You have the state of Texas now suing Facebook. I saw another piece of news somewhere saying that Facebook was about to settle some sort of lawsuit. Here it is. Facebook parent Meta to pay $90 million to settle decade-long privacy lawsuit. Like, Facebook has all sorts of bad press, and we have some more bearish news for that company today. So I'm still holding a long put on Facebook. And that's all I want to talk about today. I think I covered the bases. I really want to encourage everyone to go watch and listen to what Charlie Munger had to say and really consider your trading habits. I think that retail investors are probably going to get blamed if the markets do crash due to a bunch of this gambling-like behavior that has even I have participated in the markets, and I want it to stop. I myself need to focus on making smart investments on fundamental plays and trying to find real value and real assets to invest in. That's what I have for today. Happy trading.